Hey, this is Leo, and today we're going to be taking a look at AMC, not financial advice, not a financial advisor. So, what I've done here is I've zoomed out, right? So, I've deleted a lot of the smaller stuff in here, and I want to get an idea where we are big picture. And so, the first thing that stands out to me is this, right? So, I've talked about the EMAs in the past. The white EMA is going to be your 200 EMA, yellow is 55, green is 21. Whenever you get a golden cross, meaning that the yellow EMA is on top of the white EMA, the 200 EMA, 55 crossing over, that's very bullish. So let's take a look at what happened the last time that we saw the golden cross on the 4-hour chart, right? So EMAs have more weight on the higher time frame, and really whenever it comes to EMAs, I don't recommend just trading just based on an EMA because they are a lagging indicator. But what they do is they help to give you a bias, right, of where it's going. A lot of people will form a bias based on what they want to happen with a stock or a commodity or whatnot in the charts. That's not what you want to do, right? So what you want to do is you want to form a bias based on the trend. Well, right now we can see that the trend is up, right? So you made a high, higher low. Uh, Technically, that's a lower high, but we put in a higher high here, higher low. So that's the basis of a trend, right? And so the EMAs are showing you a moving average of that. And an exponential moving average basically is just putting more weight on the more recent price action. So um, the higher time frame you look at, the more significant this is, right? So we've been trending up for the most part. Look at most of these candle bodies, right? Most of them are above the 200 EMA. You get a little bit of a dip here, but you don't stay there long. Comes back up, get a little more dip. Doesn't stay there long though. Now here we dipped a little more, kind of chopped around, consolidated, but now we're back above it again, right? So I'm assuming that this trend is continuing because I don't have any reason to believe that it isn't. We've gotten the golden cross, so my bias is to the upside. That's interesting. Now, if we look back in the history, what's happened the last time we've gotten a golden cross? This would be a death cross, but we didn't really get anything here because this is an ending diagonal, and now we've reversed. So if we go back, golden cross, no, nothing, 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 nothing. Oh, interesting. The last time that we've had a golden cross was whenever this thing started back in January, and we saw that massive rip up, and then we came back down to the 200 EMA, and we kind of we slowly consolidated and worked our way higher until we had that big rip. So I find that that's really interesting. But typically, just looking back in the price history here, looking here, here's your trend, right? So trending down, we can very clearly see this is a downtrend. And every time you would get, not looking at the golden crosses here, but looking at the death cross, right? Because the death cross is showing what's going on with the current trend, which is down. So death cross, right? You saw that big move down. Okay, now you kind of got some golden crosses in here, but it's consolidating. It's not really showing a strong reversal. You get a death cross, right? Rip down all the way. So you can see what I mean by on these higher time frames. If you're looking at a death cross or a golden cross when it's with the trend, it can be an indicator that helps confirm your bias, right? So we know the bias is up based on um, the technicals of how many shorts there are and everything. But just looking at the chart, we have an Elliott wave count showing that it should be going higher. We have the algos that we've been looking at that these institutions trade. There's one. Uh, there's one. They're buying that 50, right? They get their target at the negative 236. This one actually got their third target at the negative 100. So let's go, pull the next one. Pulling from here up. Where did they go? Actually, that's probably pulling from here, considering that it ripped past. So, there it goes to the 50. So what's happened here is that whenever you rip past the negative 236, the first target, well beyond it, as we've done here, the computers will pull from the high because it's their attempt to catch up with the price because it's ripped away from them. And so now it's come back to that 50 and it's moving on. So, there's a lot of confluence telling us that our bias is up. So if you look at fractal patterns and all, which are just repeating patterns in the market, I mean, they happen. That's what Elliott wave theory is essentially. What we can do here is let's just take a look at where is it? Forget which one it is because I don't use this too much, but okay, so it is that one. Delete. So I'm going to, well, it's already kind of happened there. So I'm going to take, let's do this. I haven't looked at this before, but I think it's going to be interesting for us to take a look at. Kind of see what fits. So what I'm doing here is I'm taking a fractal image of prior price action and just assuming that something similar is going to play out. And what it's going to do is it's going to adjust the price measurements based on where I'm putting it because that's just how this program works. So, we can line that up there from the low, right? And then we can see where it goes. And I haven't looked at this before, so I don't know if it's going to show us anything, but it's something that I will sometimes play with. So all I'm doing here is compressing it to try to get the price action to fit where we are. Set something. It's interesting. That actually looks fairly similar there. So, that's something that we could expect. We had this first rip up. Whoops, I just moved it again. Wait, is that not the low? I need to zoom in here. I can't see this thing. Okay, so there. And this would need to come up just a hair. Okay, so look at that. That's really interesting to me. So what I'm seeing here is we get the spike up, we pull back, right? We come up here, we get that first touch, pull back, double top, makes just a slightly higher high, if you can kind of see that there. So that would be right there as that overlaps. Isn't that interesting how these fractal patterns will play out in the market? And so then you get this pullback, this little correction here, and then it rips. So if we're going to see something similar, now this doesn't necessarily indicate time, but it certainly could. It could be more compressed than this, but it gives you an idea of what the price is going to look like when it rips up, right? So if it goes, and it doesn't mean the squeeze would stop here, but it's giving you an idea of what we would see. I would actually, just from an Elliott wave perspective, I don't really like that. Well, let's go ahead and dig in the Elliott wave and see what it's telling us. I'm going to drop this down a little bit so I can get some better. That needs to be deleted. That's old. Okay, so we have our termination point here, which would be, what that means is that's the end of the ending diagonal. So assuming that we're moving impulsively off of that, right? So boom, 2, 3, 4, 5, right? So now what I'm going to do is I'm going to project out for the most probable target for the third is the 162%, or really just 1618, but basically 162%. So we're going to come from there to here. You make sure that's on the arithmetic scale. And look at that. Went right to the 1618 for a third wave, the most likely target. Interesting. Put that there. Okay. So that's likely going to be a third wave of some kind. So let's drop this down. I can't see anything on the subdivision. Maybe not that low. So I got a 1, 2. Okay. 1, 2. So just looking at this, if I recall, I counted this as a three, four, five. I was probably a little premature on that. Just what's probably happened here is it has, and this is what I mean was, I just if I go down to the 1 minute chart, it won't let me go further than that. Uh, you can't really get. Oh God, why is it moving that? You can't really get a whole lot of subdivision here, but just from my experience and whatnot, we've likely put in some sort of a very shallow first wave here, and then this is where it gets a little difficult to count it because you have these little gaps in here where I can't see the price action, but it's very likely that there's some sort of a 1-2. You got maybe some kind of a 1-2 in here, 3, 4, 5. So you got to, whoops, mess that up again. 1, 2, 1, 2, 3, 4, 5 for the third. Probably put in some sort of a fourth wave there, and then we just put in a fifth for the first of the fifth. So I need to drop down that degree. And this is just real, I'm not really digging in too deep here. I could dig in and really count down 3, 4 sub degrees, but I'm not really going to do that because I'm just not all that concerned about it. But and I'm just kind of eyeballing, this is giving me an idea of where we are, right? So raise that up to the sub minute. I'm going to change that color. Actually, I need to change the color of this wave. Okay, so I'm going to go out here to the 5-minute chart, level that out. This should be 1 degree higher. Move this up. Okay, so we have the first wave for the fifth, right? So actually this fourth wave would be down here. Okay. So now we can project out the third of the fifth wave to kind of get an idea, assuming it's done here. I don't know for a fact that it is. I'd have to count it out. It certainly doesn't look like it's done. This looks like an impulse down. Could get some sort of a flat in there. It's hard to say at this point, but just projecting, assuming that it's done, because it looks like it's come down to the 618, which is your most likely retracement for a second wave. No, not quite. So it's come down to the 50 and it's holding, right? So if we are done here and we decide to go up, right, that would put us around $57, likely get some sort of a 4, right? Oh, we have to get a fourth. There's no question about that. I need to bump that up 1 degree to the minute degree. Okay. All right, so I'm going to go out, zoom out just a little bit, flatten that. Okay, so that would bring us up to that resistance point that I've been talking about, where you have that low volume node over on the volume profile. So we get up to there, finish this one wave out, and get a little pullback for 2, and then we launch. It's very possible. Another possibility, and this would be significantly more bullish, and if you think about it, it kind of lines up with these margin increases that are going to be going into effect, I believe, Friday, which is going to put a lot of pressure on them, depending on how it all works out. It certainly sounds like it would create a lot of pressure, but I don't know how many accounts they hold. I don't know what their liquidity is like. So there's a whole lot of unknowns. You can't solve the algebra equation if you don't know all the variables. So, gosh, why does it keep moving? What we could be putting in is a 1-2, 1-2. Less likely since we have such a good measurement for the third wave here, but it's certainly possible. I've seen it a lot of times where you'll think that you have a 1, 2, 3, 4 and you're working on the fifth, when in reality what you've done is you've put in a 1-2, 1-2, 1-2, and you're going to get a very overextended third wave. That's very possible. I'm going to zoom back out though because I want to get some market geometry, try to figure out some structure here to see where we are. So I'm going to delete this. At least you guys have an idea of what's going on there on the smaller degree. And really, the smaller degree is not as important. I know it might help make some people feel more comfortable on a daily basis to, oh, okay, well, we just finished the C, so we should be heading up. But really, just worrying, big picture here. So I'm going to use Andrew's pitchfork. You want to use the three most significant pivots in the market to determine where you're going. So just eyeballing here, I think this would be the most significant pivots. So working from that high. Okay, I'm going to project out from the low and look at that. Look how nicely that's holding prices. He comes down here, touches that halfway parallel, and then moves down. So prices are contained here. Um, that's very interesting. So that gives us a little bit more market structure to work with. Kind of running out of things to talk about now. So I think I'm going to wrap this video up. If y'all have any questions, go ahead and drop them down in the comment section and give this video a like. All right, I'll talk to you later. Thanks.